Amid global gloom, a bright future for India. The country's economy will grow by 6.5% in the coming fiscal year, starting in April. That's according to the International Monetary Fund, which has revised up its forecast for the South Asian country. It's despite a negative outlook for the broader region, where growth is expected to slow to 5.4% in 2024. Presenting the fund's projections, the chief economist singled India out among other emerging economies for its momentum.
The global economy has been surprisingly resilient, with growth now projected at 3.1% in 2024 and 3.2% in 2025. For 2024, the slight upgrade from our October projections is largely due to resilience in the United States and several large emerging markets and developing economies, coupled with more fiscal support in China.
India's finance ministry was even more optimistic, projecting 7% growth and expecting the country's economy to become the world's third largest by 2027.
India has seized the moment. Why do I say that? I say that because you're not just transitioning from the 10th largest economy to the 5th largest economy. You're growing at 7.2% last 3 quarters. The coming quarter and the next year, all the forecasters and all those who make it their professional duty to assess evolving situations are pointing a good picture.
The finance ministry has just presented a short-term budget ahead of parliamentary elections. The finance minister noted India's progress in reducing the fiscal deficit and attracting foreign direct investment.
The FDI inflow during 2014 to 23 was $596 billion, marking a golden era. That is twice the inflow during 2005 to 14. For encouraging sustained foreign investment, we are negotiating bilateral investment treaties with our foreign partners in the spirit of First Develop India.
However, the economy still faces plenty of challenges. India is no stranger to global risk factors, including geopolitical tensions, climate change, and weak demand. And despite rapid progress, the country still struggles from high levels of poverty and infrastructure deficits, which the government's budget seeks to alleviate. But it has been quite a ride for the world's most populous country. Rupert Stone, TRT World.
On this now, let's go to Griva Raval, Assistant Professor at GLS University from Gandhinagar in Gujarati, India. Thank you for being with us. Right, so the IMF has raised prospects for Indian growth this year, mainly driven by its domestic demand. I mean, how has its internal demand managed to be that resilient in the last 12 months, especially?
First of all, thank you for inviting me here. Of course, yes, IMF now expects India's GDP growth by 6.7 in FY24, which is 40 basis points higher than its previous forecast of 6.3, given in October 2023. Now, the main reason why this resilience was underpinned is robust goods and services tax collections, rise in auto sales, and most importantly, rise in consumer optimism, which was seen very much higher, especially during the festive season in the last quarter. Now, double-digit credit growth is also one of the reasons why it was resilient throughout the year. The government expenditure has also increased, which supported the resilient domestic demanded growth. And if we talk about the bank credit growth, it increased from 15 in the first quarter as compared to 13 in the last quarter. So overall, the domestic demand was seen increased by both government expenditure and continuous consumer optimism.
Really interesting. And national elections are also around the corner for the world's 5th largest economy. What do you think this will mean for its stock and bond markets? What usually happens when it comes to elections and equities?
Right. So, of course, yes, the elections are around the corner. And government policies significantly impact the profitability and viability of many business segments and the investors, which actually makes the investors remain cautious right before the elections. They are a bit anxious as well. But it all cools down in the medium term, especially when the elections results are announced. And if we talk about the stock and bond market, you don't have to worry if you have a well diversified portfolio. We can see the oil prices cool down. And what is important here is that if we talk about the next big stock rally, which is expected in the later half of 2024, when the RBI is expected to cut down the interest rates.